in the crypto space. So certainly I've got
so maybe I exaggerated a bit with the 80 years, but you know, you've got a lot of trades under your belt, and
yes,
you're damn sight better at this than I am. So I am really happy.
I've definitely got enough experience to make enough mistakes. Absolutely.
So Stuart, let's just talk. Let's just start off with kind of a general overview of where the markets are right now. What you see are the trends. I mean, we've had this whole COVID thing that has taken us for this wild ride. Looks to me like Bitcoin has kind of weathered the storm pretty well, but it's not doing anything really exciting, is it?
For sure. So what we saw in the middle of February, global markets caught a cold, and that also included cryptocurrencies, which I think most people weren't expecting. Certainly, when you look at global equity markets, the S&P 500, the FTSE 100, European indices, you'd certainly be expecting a reaction because obviously they have exposure to the travel sector, airlines, the hospitality sector, etc. You name it, almost every sector.
Yeah. I mean, everything was closed down. I mean, pretty much. So
you switch revenue off. You don't switch global economies off and expect the world to do well. That's just never going to happen. However, Bitcoin historically and cryptocurrencies by and large have seemed to be a counter trend, almost the inverse correlation to global equity markets. Didn't really happen this time around. It looked as though a lot of cash, and we speak to a lot of clients on a daily basis, and the fear stepped in very, very quickly this time around, probably quicker, I would say, than the credit crunch. And everybody got back to cash really, really quick, which was unusual, from equities, from commodities, from indices, from FX, from cryptocurrency. So there was a correlation across the board. It started about mid-February, around about the sort of 13th, 14th, 15th of February. From a Bitcoin perspective, and this is what we follow a great deal more here at Blockman Capital, it started then, but the big day was the 12th of March. When Bitcoin gave up about 50% of its value, dropping from $8,000 down to $4,000, whilst we were actually sat there as a team of traders watching it happen in front of us. It was quite something to see. We picked out the stop losses, so it made no difference to us, but it was an interesting time. It looked at the time, and I don't know, if you sort of follow us here, sort of follow cryptocurrencies in a great deal, but a lot of the sort of leveraged positions, and there's a couple of sort of big exchanges, the biggest being BitMEX. They offer up to 100 to 1 leverage on Bitcoin. They liquidated all their positions. So essentially a lot of people got caught out really, really quickly, which is so unfortunate. Then from that, and it was about the turning point in equity markets as well, around about the middle of March, things have sort of picked back up. Again, looking at the S&P 500 top stocks in the US, the FTSE 100, top 100 in the UK. Things have sort of picked themselves back up, but Bitcoin's really gone on a bit of a run. So from there, it's actually up about 88% from the drop. So recovered back up to what it lost prior to the 12th of March. So yeah.
Were you able to buy in at the $4,000 for your clients?
Absolutely not at all. I won't for 1 minute pretend that we know something that everybody else doesn't. When it hit 4,000, it was scary. We were sat there, and then it started picking back up, and we were like, "Should we buy in? Should we buy in? Is this going to recover? Is it going to drop to 3.5?" It was frightening. We started at about 6, so that was our level. I think anything 4 to 6. You either had, you were lucky, perhaps, or you just had a little bit more courage than we did. In all fairness, we were trying to apply a bit more of a disciplined approach because we felt it was a little bit of a gambler's market initially, and then since then, really the uptrend sort of picked back up. But similar to global equity markets, you only have to look at the FTSE 100 and the SP 500, as I've mentioned, and there's been some real recoveries there. I don't know if you're sort of followers here sort of know much about equity markets, but look at Barclays Bank, for example, here in the UK, bottomed out about 85p all the way back up to £1.35 a share now. So, you know, that they've gained considerably, over 50% up from the bottom. So I think it's a game of a number of halves. If you want to trade airline stocks or travel stocks because you fancy a gamble, give it a go. I wouldn't touch them personally with a 20-foot barge pole. I think that the worst possibly hasn't played out there. But other sectors like banks, you know, they're going to be affected because the economy's been switched off. But ultimately, we all need to bank. You know, that things haven't changed globally to that level. So banks will recover back up. Back in March, even now, they still look great value as a midterm play. So yeah, it all depends on your time horizon on trading.
So that makes me think about one thing. You know, we for years people have been saying Bitcoin is digital gold, and whenever the markets crash, people are going to rush to Bitcoin because of this. You know, I mean, they're printing US dollars like they were candy bar wrappers. You know, everybody's going to rush to Bitcoin because of the supply issue that you can't create more Bitcoin. So, you know, logic would say that if they're turning out dollars and pounds sterling like mad, then the currency that isn't doing that should rise spectacularly. But I don't think we saw that.
No, and you're absolutely right. And I think there's not just one lever that governments can pull. If there's an economic downturn, what I will say to start before I go into the next bit, I don't think this economic downturn has played out by any stretch at all. And what I mean by that is the Q2 figures for the UK, which is, you know, what I follow more closely, I guess, because I'm here in the UK, don't come out until early July. So we've switched the economy off for an entire quarter, and we haven't shown the actual figures for that. There's estimations kicking around, but the real hard facts aren't out there yet. So I think that it's not as sort of we're going to get through this as nicely as we think we're going to. Importantly, governments immediately reacted this time, different to the credit crunch again. As you say, printing money, the states, $3 trillion. We're up to about 850 bill. Italy, 750 billion euros, etc., etc. Interest rates slashed to zero or almost instantly. There are a number of levers: printed money, quantitative easing, call it what you will. There is reducing interest rates. The issue this time around, when we were in the credit crunch, we were able to move interest rates down quite considerably. We already started on a pretty sticky wicket at 0.5%, 0.75%, depending on which side of the pond you were. So there haven't been a lot of levers to be able to pull. So to start off with, I don't think we've seen the true economic outfall across Europe and across the States. Going back to your original point about Bitcoin, the reason why is that there has been a counter. As I say, it's recovered 88% from that low. So it is still up and around about the sort of $10,000 mark as we speak. So it does look relatively healthy compared to other markets. But it's just adoption. You know, there's still such a small percentage of people that have had any exposure to cryptocurrencies. If they have, it's likely to be Bitcoin. When you start talking about just the next couple of rungs down, Ethereum and Ripple, and then you start going lower and lower, most people are kind of just shaking their heads and going, what the heck are you on about? You know, it just doesn't mean anything. And Bitcoin is almost a bit, you know, it's got as much as a positive aspect as a perceived negative aspect. So I don't think everybody immediately embraces it. So in answer to what you said, yep, there is a finite resource of Bitcoin by the laws of supply and demand. Therefore, it should go up in value. But the reality is that until we get, you know, real mass adoption like the dollar or sterling or euros, it's simply not going to be that way, if that makes sense.
And you touched on this, and I think that we're both in agreement here. I'm perplexed. I look at the stock markets and I say, massive unemployment. I see companies, big blue chip companies, literally closing down or going bankrupt, or calling for Chapter 11 or Chapter 12 or Chapter 37. Who the heck knows which one?
Yep.
I see so much going on in mainstream economy that is bad, and yet we see the stock market's almost back to where it was. I'm not sure if we're you flaked out there a second.
Yeah, my apologies.
I have this feeling. Yeah, I have the feeling that this is kind of a bubble kind of recovery thing in the markets, that with equities that doesn't make sense. I mean, we haven't swallowed the frog yet.
I couldn't agree more. I mean, it goes back to exactly what I was saying, that we haven't even reported hard facts and figures yet. We haven't seen if there's a second wave coming along. There, the number I heard for Spain was 4.5% of the population have actually had exposure to COVID, and in Italy it's 5% of the population. The outbreak was in a very, very small, low location or locale in Italy. So who knows? I mean, I haven't got a crystal ball. Maybe we've got on top of this, and maybe everybody's done a really good job. But short of a cure for COVID, at some point we're going to have to live with it. At some point we're going to have to be exposed to it. We cannot continue as we are, living in potential lockdown or regional lockdown, or we'll stop the economy and start the economy. I don't know. I just think we aren't over this by any stretch, even though we're all kind of patting ourselves on the back, and haven't we done a good job? And the R rate is coming down, and the death rate, which is amazing. It's great that we seem to be getting on top of it, but we're getting on top of it because we're not exposing ourselves to it. We're getting on top of it because we're all staying inside. The economy's switched off. Life just can't stay like that. Life can't continue like that. At some point, we've got to get on with it, and we'll see if it then returns or what the governments do. I don't think we've seen the bottom yet.
Okay. So let's talk about some of those other coins that are out there. I mean, we all, Bitcoin's famous. We all know that. But I mean, Ethereum is kind of a little, I'm not going to say it's coming back. It's not anything near what it was when, the ICO boom was going. And, I remember, seeing Ethereum at $1,000, and ETH, it's at least it's not under 100, which was not that long ago. It was back down to under 100.
Really not long ago, a few months ago. Absolutely.
Yeah, that was so. Should we be looking at some of the other coins and seeing if there's some good opportunities there?
Yeah, for sure. So again, it's down to in answer to your question, yes is the answer. But again, it depends on your appetite for risk. It depends on your time horizon, and it depends if you're trading or investing, holding. What's your methodology? So that's what we do here at Blockman. We try to guide people in the sort of right direction, because everybody has different expectations. So Ethereum has a true value. It's normally seen as a true value within the IT sector, in particular with smart contracts, and certainly you'll see IT professionals, IT companies exchanging Ethereum for services. So it has got a general value, that there is something associated with it. It has been as high as $1,000, it has been as low as $85, $86 recently. So there's what you might call potential headroom there. But going outside of maybe the top 10, certainly the top 3 maybe, but certain top 10, you kind of, it depends on the utility of the underlying asset. I fear all cryptocurrencies may not be here forever, and I might be controversial by saying that, because I know there are a lot of people who are absolutely diehard crypto people. But I just think from a real world perspective, if you've got thousands upon thousands of cryptocurrencies, while some of them offer a certain utility, do all of them offer 100% long-term longevity? I'm not so sure. I think there will be a handful of cryptocurrencies that have mainstream adoption and appeal, and that's because of their very nature. Bitcoin, because it's Bitcoin and we all know who it is and what it is. Ethereum, because I've just mentioned there, the IT sector. Ripple, because of their involvement with high street banks and certainly international payments through high street banks, the underlying architecture. So, but I think when you start getting outside of that and you start looking at the smaller cryptocurrencies, there's a heck of a lot of scope to trade and make some good returns. But would I be, for example, buying, let's say, I don't know, Stellar and putting it in a kitchen drawer, or would I be going back to Barclays shares and putting them in a kitchen drawer? I think two very different prospects, if I'm honest with you. One, you could become a millionaire with something like Stellar, who knows? But and you wouldn't with Barclays shares. But equally speaking, I think you could also come very unstuck with some of the small cryptocurrencies. Being honest,
and it could be that 3 weeks from now there's a new one that actually leaves them all in the dust. We don't know yet. Yeah, it's so early. It's so
we're so early on the path with cryptocurrencies that kind of who knows. So it goes back to my time horizon point in how nimble you are. If you want to get in, have a go and trade, absolutely. There's great returns to be made, and with certain exchanges, there's plenty of liquidity as well. Certainly in the sort of top sort of 50 at Binance, you can have a good go. But outside of that, if you're just buying them for the long term, just have a go. If you've got money there if you're able to lose the money or you're able to double the money, then just give it a go is what I would say. So for me, the top 10 offers the sort of most I guess the stable way to invest in cryptocurrencies. Outside of the top 10, I think you're trading rather than investing, if that makes sense.
Sure. And so with your services that you give your clients at Blockman, you kind of take you make it easy for people, because you do that. You're 24/7. You've got a team 24/7 watching the market go up and down. I don't know exactly how often you're trading each client's accounts, but I mean you're there, you're watching, and you're trying to make sure that you're selling at the tops and buying at the bottoms, right? I mean, kind of that's the idea, right?
That's the utopian situation, Dennis. Isn't always the case that we get in at the bottom and out at the top. So more often than not, what we found now over a number of years of trading cryptos, and we brought tried and tested techniques from the stocks and shares world and the FX world, and just started applying them, and it's a bit easier in a way because these coins move a heck of a lot quicker. Generally speaking, Bitcoin's been a bit quiet the last few days, but generally speaking, cryptocurrencies move a heck of a lot in an intraday movement. So you can normally have a bit of a go. But the thing that we found over a number of years is, get on in the upside and make the most out of a run up and avoid the downside. Don't try and be too clever. If the market's giving it up, don't try and second guess the bottom. Don't try and, it's going to turn here, it's going to do this. Just wait, play it out, be patient. As I say, go back to March the 12th, we got kicked out at about $7,800 on Bitcoin. And then we just sat there watching it. And I have a lot of pals, I have a lot of colleagues who are involved in the crypto market, and a lot of them had a really difficult day that day. We didn't have the best of days. We took a bit of a loss when the market started giving it up, but we didn't take anything like the pain that most other people did. And as I said, and I'm not going to pretend that we got in at the bottom when it's forward. I'm not going to pretend we got in at 5 because we were scared, or cautious, should I say, rather than scared. Cautious, better way of putting it. But then when it got back up to 6, start looking stable, looked like it was going to start recovering back up. We're going into Bitcoin halving that happened on the 11th of May. All the indications were good, and we were able to develop a pretty good end of March. Certainly April was a good month for us, and May was okay as well.
Yeah. So, and I mean, hey, I as if I were a client of yours, that caution would be something I would be happy about. And from 6 to 10 is a nice run up so far.
Absolutely,
it's a lot bigger than the 4 to 6. It's a lot bigger than the 4 to 6.
Yeah, for sure. Well, I mean, it is from a a sort of monetary perspective, but from a percentage perspective, it's actually greater to go from 4 to 6. It's obviously 50% up compared to 6 to 10,
Okay.
which is like,
a good
but
mathematical answer.
I'm splitting hairs to a certain degree. It all depends. So the key to trading cryptos is to trade with discipline, to trade with strategy, and to stick to it, and to have risk management in place. There are plenty of times, and it happened just on the 2nd of June, the price of Bitcoin burst out and it looked like it was going to keep galloping on, gained about 10% in the space of maybe 15, 20 minutes. And, again, my traders were sat there going, this is going to go, we're going. I'm like, no, just play with caution here. And lo and behold, in the afternoon of the 2nd of June here in the UK, the price, dropped by 15%. So it's just about having discipline. It's just about making sure that you protect your gains and don't try and second guess the market. Don't think that the market's bottomed out, because more often than not, it hasn't. Wait for it to play out. Wait for a nice bit of upward movement. And some of the things we look for, one of the strategies that we or should I say formations that we look for, is what's called the flag formation, the pennant formation, as it's sometimes known. And what you'll see with the price of Bitcoin is it winds itself up to a point. So you'll get a series of lowering highs and a series of raising lows as the sort of price action tightens up and tightens up. And as you reach the apex, you'll often get exactly right. So however it looks on here, I'll try and get that.
I think mine's backwards.
That type of shape.
Good.
So play in between it, and maybe next week when we speak, I'll have learned how to share a screen. So, but by the way, just touch upon that. I was explaining to Dennis earlier, to anybody who's watching this, I'm a trader. I'm not a marketer, so I'm not great at all the other bits and pieces, but I'll learn by next week. So what we found is the pennant formation, as it reaches the apex of the pennant, you'll see a big breakout. The key to that is the strategy to trade that breakout. More often than not, you'll be second guessed by which direction the breakout happens. Is it up? Is it down? You never know. The key to it is what's called a stop buy order or a stop sell order if you're going short. That means that you're not risking anything. You're waiting for the market to move before your order activates and you get involved in the market. So there are a number of ways to trade it, but you make sure that you trade that with as little risk as possible. And you may miss the first part of the break, but then you'll catch the rest of it.
Yeah, great advice for people listening, man. That's the kind of stuff that I think is really cool. Okay. Well, we're going to wind this down for today, but I have to ask you, because everybody asks me, and I don't know what I always say. Don't ask me. I have no idea. But I mean, I hear people saying Bitcoin is going to get to 20K by the end of the year. That there's no way it's not going to get to 20K by the end of the year. Give us your take, Stuart. You think it'll make it?
So I might give it a bit of a long-winded answer to this, but it actually goes back to another one of the things that everybody was talking about, which I alluded to, the 11th of May, Bitcoin halving. Bitcoin halving, when the reward for solving the blockchain halves and the number of Bitcoins given out as a reward halves, should mean that the supply slows down, and if demand remains the same, price should go up. So in the run up to the 11th of May, the market really ran on, really gained and gained and gained. And then the 10th of May, 24 hours before it actually happened, the price collapsed. So that kind of just explains what everybody's real sort of thoughts are about Bitcoin. So here's my take on it. If all things were equal and we haven't seen the bottom in the global economic slowdown, and there is a second wave and blah, 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 all the other bits and pieces we've been talking about, Bitcoin should break above the current $10,000, which is the top end. We should then see a retest of the 13.2. If it breaks that, we should see a retest all the way back up to the 20,000 bucks. So that should, all things being equal, happen if everything else holds true. What actually happens in the crypto market is almost always the opposite of what you're expecting. So I don't want to be political and try and give two answers here. I think that there is every likelihood that by the back end of the year, we'll have broken through the 10 and we will be retesting 13.2. And if we retest that and break that, we should go back up to 19 or 20. I don't know if it's definitely going to happen, but I would probably be more inclined to think it's going to happen than not. So I'd be hedging my bets on the upside rather than downside. But I think before that, there's plenty of opportunity for a bit of a correction back down.
So those of us who just don't trade and just happen to have some Bitcoin stuck away in our sock drawer, we should just hang on and see what happens, right?
Again, it goes back to if you trade or if you invest. Bitcoin is something you can, in my opinion, invest in. It is something for a kitchen drawer, as I say, and a time horizon thing. If your time horizon is the next 6 months, you might want to be a bit cautious. If your time horizon doesn't really matter and it's 3, 4, 5 years, just sit on it. I have absolutely no doubt in my mind that at some point in the future, that Bitcoin is going to be worth a heck of a lot more than it is right now. Do I think that it's going to be a clean, easy ride? Absolutely not at all. But you only have to look at, the trend overall. And for anybody who's interested, and again, hopefully by next week, I can start sharing some of this stuff. If you just look at price action after halving, you'll see some interesting charts that are easily Googleable, if that's a word. And you can see that logarithmically speaking, the price of Bitcoin just keeps improving as the reward halves. So I don't really see why that should particularly change. I don't think anything fundamental has changed. If anything, things are better. Adoption and awareness is better. The opinion of Bitcoin is better. I know from experience that more and more what I would call seasoned equity investors or FX investors are now got part of got cryptos as part of their portfolio. It's becoming a lot more mainstream and a lot more sort of realized, as it were. So yeah, time horizon 3 years plus, put it in the kitchen drawer, forget about it, and you'll be very happy in a few years' time.
Yeah, great. Well, that sounds like a great place to end today's live stream. Thank you very much, Stuart. I enjoyed it. I thought it was fun. Really good information. Really good information for everybody out there. We will also be publishing the transcript on Crypto Trader News, so it'll get indexed and people will find it that way as well. So thank you very much, and we'll talk again next week.
No problem at all. Thank you very much for having me, and look forward to it. And by next week, I'll be sharing my screen, I'm sure.
Awesome. Great. Thanks a lot.
Thanks a lot.